All right, great. Let's get this thing kicked off, guys. All righty, welcome everybody to our Friday night wealth creation course. This is Jerry here, owner and CEO of Wealth Dynamics, coming to you once again with a live. We do these every week, every Friday. I'm on the East Coast right now. Let me flip my Wealth Dynamics hat around here. I'm on the East Coast right now, so it's 10 p.m. my time. So all of you guys that have been watching our courses for the last 3 years on the East Coast live, I feel you guys. I appreciate it. It's definitely a different game when it's 9, 10 p.m. But it's great to see everybody here. And tonight I'm going to be going over a very important topic. Okay. So tonight I'm talking about how do we handle financial mistakes? Okay. How do we handle financial mistakes? Now, this is a topic that I think probably relates to everyone watching, 100% of people, because all of us have made mistakes with money before. Right. So we're going to talk about how do we handle that. Now, before we dive into it, I want to kind of cover our house rules as usual. So first things first is, this is a course focused on education and on finances. Okay, so we're talking about money, we're talking about currency, we're talking about saving, investing, debt, taxes, all of these things that we interact with on a daily basis, right? And again, it applies to everybody. There's not a single person that can watch this stream that can say money does not somehow impact their life. Okay, so there's a group of people on tonight that's here to learn. They come every week. We've been doing these courses going on 3 years now. And there's also a group here that it's Friday night. They're bored. They don't have a girlfriend or a boyfriend. They got nothing better going on in life. So they're here to troll. If you're here to troll, kindly exit. Okay, we're going to be focused on positivity, production, output, personal development. We talk about every week, there's producers and there's consumers. Somebody that's here to learn and contribute and grow is a producer. Okay, they're adding value by being here, by contributing, by asking questions, by being engaged, right? Somebody that's here to distract, to be inappropriate, to be overall negative or critical, that's a consumer, and a consumer can never build wealth because they take in and they never put back out, right? Wealth comes from production. So that's the first thing, is make sure that you're positive, you're encouraging, you're engaging, asking good questions. Second thing, and we're not going to go too deep into terminology because tonight's course is going to be relatively simple. But if there is anything that I say that you don't understand, stop and ask. Okay, drop it in the comments. I usually answer questions at the very end, but if it's like hey, I don't understand this moment, like what does that word mean, or what did you mean when you said that? Ask it immediately, and I'll look and I'll see it and I'll stop and answer it on the spot, because it's important to me that you understand what we're talking about, you understand it, and it's simple. And on tonight's point of making financial mistakes, 100% of mistakes start when we don't understand something. Okay, so for us to know that, we have to really dial in on, okay, I'm going to be locked down when I don't understand something. For me, that is personally not okay. Like, it is unethical for me to move forward and continue listening and trying to learn when I know that something just happened that I didn't understand. Okay, so I want everyone to adopt my mentality on that for the next hour tonight, is if you don't understand something, that is not okay. Okay, you stop, you ask the question, we handle it, we get you on track. And then finally, we will go live at the end. We're going to answer questions. We will wrap up a little earlier tonight just because of the time. I'm in a hotel, and I think that it's past quiet hours, and I tend to talk loud. So I don't want to be on here at 11:30 and have them come knock on the door, because then the dogs will bark and then it'll be louder. And the next thing you know, we're kicked out of the Hilton. Right. So we will wrap up, but we will answer questions live as usual around 7:45 Pacific time. And guys, we're going to go ahead and dive into it. So we're talking about financial mistakes. And Lexi, could you grab me my phone right there on the counter? We're talking about financial mistakes. Okay, things that we did that maybe had negative repercussions, right? It can also be things that maybe we didn't realize or intend, and they happened in a way that we didn't expect, and it threw us off. Okay, now I want to go ahead and define the word mistake, because I think a lot of us make mistakes. I think sometimes we don't understand mistakes fully. So the first definition is an error in action, calculation, opinion, or judgment caused by poor reasoning. Very good definition. Okay, an error in action, calculation, opinion, or judgment caused by poor reasoning. So at the root of mistake, it's saying the root of a mistake first, and I'm going to share my screen here, is poor reasoning. Okay, poor reasoning. Poor reasoning means that we didn't have logic somehow in the equation. Poor reasoning would mean that we were looking at the data. Poor reasoning. Okay, we were looking at the data, and basically we thought we had all the facts and we didn't, right? That's where mistakes start. No one ever made a mistake thinking that they were making a mistake. Okay, so really at the root of this mistake thing is, how do we reason better with our finances? Okay, we look at the process of reasoning. Let's actually look at that word as well. What does reasoning mean? Okay, it's going to be a verb, right? Reasoning means the act or process of a person who reasons, the process of forming conclusions, judgments, or inferences from facts or premises. Okay, so reasoning is the process of coming to a conclusion. So if we made a mistake with finances, it means that there was a lapse in judgment, something happened that wasn't supposed to happen, like it says, with a mistake, but it came from us looking at something and coming to a wrong conclusion. Think about that. So a mistake is rooted in the inability to make a logical decision based on the data that we have in front of us. Okay, or lack of data, right? So if we really look at this with the mistake, we could have a couple ways the mistakes happen. And this is important to understand from an anatomy standpoint. We can almost look at this as like the anatomy of a mistake. On one side, right, we can have data, right? But then we also have poor reason, right? So we have data in front of us and it's true, and we have the inability to look at it and make the right choice. Okay, I've been there. This comes from financial illiteracy, right? Good data, for example, it's tax season. Let's use this as an example. I have my tax return. I give it to my CPA. I give them all the data. It's good data. I don't know how taxes work. So they send it back to me and they say, hey, give us your final approval before we send this in. And I don't realize that I've missed out on deductions. I could have paid my kids and I didn't, right? I could have contributed to a plan that reduced my income. I didn't do that either, but I don't know any of those things exist. And even though I have the correct data, I made a mistake because I lacked the ability to create a logical outcome with that data. Okay, so this is the first thing, and this is really where we can take the most responsibility. Is our ability to reason comes from what do we understand about what we're seeing, right? What do we understand about what we're seeing? So we can have data. We can also have bad data, and we can have reason, right? And this is a equation of, we think the data is good, it's not. And so we look at it thinking that this is good things to look at. This is smart. This is intelligent, right? Like think of what could be an example of this where we have bad data. Okay. This could be the basic information we learn about money. Okay. Money is this green piece of paper, and we earn it by working because we go to school to get a good job, to get a degree, to get good grades so that we can have the job and then work for the money. And so when we get the money, we give it to the bank and we give it to Wall Street and we give it to the tax man so that we stay out of trouble. And then one day when we're 60, hopefully we can pay off our house, have a nest egg in our retirement plan, and we can live off of that little nest egg and then hope that the money runs out before we die. That would be bad data. I've seen some of the most reasonable, logical people, I was one of them, make mistakes with their finances based on the fact that they had bad data and they were trying to make sense of it. Okay, do you know how you can tell something is bad data? The way that I tell is I look at what is the outcome. Okay, if I'm reasonable, and I know when I'm being reasonable, I also know when I'm not being reasonable. I know when I'm stupid on a subject. All of us do. We know when we don't have the information and the knowledge and the know-how versus when we do. So if I know that I have the information and for some reason the outcome still seems off, that means somewhere there's bad data. Okay, it's like getting a calculator. If you put the wrong equation in a calculator, the calculator is right because it's doing its job. Its job is to equate the numbers that we put into it. But if we put the wrong numbers into it, then it's going to give us the right answer based on the wrong numbers. And we're not going to know it's the wrong numbers because the calculator is going to spit out the answer. It's going to look correct until we try and use it, in other words. Okay, so this is another one. We can also have bad data, right? And poor reason. This is a lot of Americans today. We have bad financial data and we have the inability to reason with it. Okay, no, this is a double-edged sword because it starts not with the bad data. It's easy to blame the data. It's easy to blame the information and say, I didn't know, this person gave me the wrong stuff, right? But if we look at this, the poor reason is really where it starts, because you could give someone with poor reason good data and they wouldn't know. But it's like my dog Samson over there. I can give him, I did it tonight. I gave him crab leg. He didn't know the difference between that and his dog food. Like, he ate that just like he eats his dog food. He swallowed it without ever savoring it or tasting it. That's like poor reason. You can give someone with poor reason good financial data and they can't tell it's good data. Okay. Now this is the negative part about it. You can also give them bad data, and their inability to reason, they won't be able to see that it's bad data. And so they're going to act on it. This is where banks and Wall Street and the government come in and take advantage of us. They know that the information they're giving us isn't good for us. They know that the retirement plan is a bad idea. They know that the mutual fund's a bad idea. They know that the tax system, it's got so many loopholes that it's actually optional. They know all of this stuff. They know that they're going to pay you 0.04% interest in your bank account while they loan your money out 5 times, interest that they're charging or paying you, and they're loaning it out to 10 different people at the same time and making double and triple digits while they pay you 0.04%. They know all of that, and they also know that you have no idea. And they know that you and I will never know. Now, luckily, if you're on the stream, we're fixing that. That's the point of this, is how do we get the information? Now, the optimal one is we have data and reason. Okay, and we have data and reason. This is where good things happen. Okay, now here's the thing though. It again starts with my ability to reason, my ability to come to logical conclusions naturally with money because of my understanding with money. My ability to do that will actually detect bad data. I'll be able to see and say, hey, this doesn't look right. This math doesn't make sense. There's something missing here. There's maybe risks that aren't being talked about, or there's information that should be there that isn't. These are called out points, things that should exist that aren't there. Either someone else with the inability to reason put the data together, and that's why the things are missing, or someone that thinks I don't have the ability to reason put it together, hoping I'd never know. Okay, but this is where we want to be, because this ability to reason then gives me the ability to analyze, is it good data, bad data, and avoid the mistakes, right? So I really want to make sure that we understand that any one of this first quadrant, this second quadrant, these third quadrants, these are where mistakes happen. Okay, so this is where they start. And if we're trying to correct this issue, it means that we really have to understand money. We really have to spend time studying it, learning about it. And there's so much of it, right? Like I said, just with taxes and debt and investing and all these things that we talk about that are basics, there's dozens of different little webs that come off of it that we've got to learn about. And so what I want to encourage everyone on tonight is, yeah, it seems overwhelming, but you've got your whole life ahead of you. You've got your whole life to figure it out. And so it's the decision that, okay, I'm going to treat this like a marathon. Right. Nano, one of my staff, he got certified on our bullion course the other day, and he made an excellent point. He said, hey, I spend a little bit of time every day learning about money. Sometimes it's new, sometimes it's a review, but it's that consistency of always doing that causes me to be able to win with finances, because it builds up and it compounds. Okay, so if I look at this and I say, okay, well, I've got to learn about this and that and this and that and this and that, and each one of those things has 4 or 5 things about that I've got to learn about, and each one of those has another 4 to 5 things, and I say, that's overwhelming, that's too much work, I don't want to do it, I quit, then I'm going to live my entire life in the first 3 quadrants. Versus if I do one thing different, which is saying, yes, it's a lot of information. Yes, it's a lot of work, and I'm going to take it one day at a time. I'm going to learn one thing about money every day. Like we talk about in our big 3 challenge, I'm going to learn about money every day. I'm going to earn income, and I'm going to track my expenses. And if I do that every day, it builds up over time. And then I eventually end up in this 4th box. And progressively, I can start making better decisions. Right. So what I also want to talk about here is I want to talk about, how do we handle decisions and mistakes when they do happen? Okay. Because it's easy for us to say, hey, let's avoid them. But the fact is, they still happen. Right? Nobody's perfect. We're never going to avoid them 100%. I still make mistakes too, right? So here's what I do when I have mistakes happen with my finances. The first thing that I do, and I'm going to see if I can have my pen work here instead, because this is a little neater. Perfect. So the first thing that I do is I realize it. Right? I realize it. Now, this term realize, it's not just meaning I had an aha moment and saying, oh, that was a mistake. right? In the investing world, there's something called a realized gain, right? It means that I sell something and I actually take the profit. I take the profit and I pay the taxes. That's what I mean by I realize it. When I make a mistake, I am taking the mistake full on and I'm going to pay the price. There's no trying to avoid it. There's no not confronting it, sweeping it under the rug, pretending like I didn't know because it's easier to ignore it than to fix it. Realizing means I take on the full responsibility of, okay, that's a mistake that I just made. And there's going to be consequences, and I'm willing to buck up and pay those consequences. That's the price for the education that I'm about to receive from this mistake. Okay. So that's the first step. I always realize it. Then I admit it. Right? I take it in. Like I realize it, it's mine. I own it. I admit it. I'm going to own up to it. So there's no blame. It's me. Right? If I make a mistake with finances, like I say, finances come down to the ability to operate with basic arithmetic and look up words. That is literally it. So when I make a mistake, I'm not hard on myself, but I'm also not like Skittles and rainbows. Like it's okay. You know, it'll work itself out. No. There were two things I needed to do. I needed to look up a word to understand a definition so that I could understand the language, the vocabulary of what I was just dealing with finances. Let's say it's a mistake I make on my taxes or an investment, right? That means that there was some word or phrase that I did not understand that I need to go look up that I should have looked up. And either I knew I didn't understand it and said, oh, that's okay, I'll sweep it under the rug and look at it later. Or I said, I don't understand that I don't understand and I'm just going to keep going. Because again, it's one of those blind spots. I'm ignorant and don't have the right data, or I'm ignorant and have the right data and don't know about it. So I have to fully admit and take responsibility. There's no blame. There's no, it's their fault. It's no them. It's no, I was distracted. It's I made a mistake and I'm admitting it. Okay. Now, the third step that I take when I make a financial mistake is I look at what is the worst case scenario, right? So let's say I'm doing an investment, okay, and I don't vet the deal, and I put the money, let's say, in the stock market where I don't like it, I don't understand it, it doesn't fit me, and it doesn't fit my goals, right? And then I realized that I just made a mistake. Crap, I made a mistake. Okay, that was my fault. What did I not understand? Was it the math? Was it the vocabulary? That's on me. There's no one else that's at fault. All right, what could happen? Okay, this is not like being paranoid and going down like the what ifs trail. It's I'm going to look at, okay, what's the worst case scenario? Okay, because it's probably not going to happen, but if it does happen, I want to fully accept that that's a possibility. Okay, what this does for me when I look at the worst case scenario is it gives me an urgency to fix the mistake. Okay, like if it's big, like I could lose, let's say I could lose all of my money. That's a big enough worst case scenario. I'm like, man, I need to have that mistake fixed and handled yesterday. So I'm not going to wallow and I'm not going to put it off and I'm not going to blame it on anyone because it doesn't matter. None of those things can help me if this worst case scenario happens and I lose my money. If I lose my money, I will not feel better saying it was that guy's fault. That doesn't bring my money back. That doesn't help me one bit. So I look at what's my worst case. Okay. Now, the next part here, and this is really for me where I believe, I excel, is urgency. Urgency in solution. Okay, I handle the hell out of the mistake as fast as I possibly can. Okay, a good example of this around this time last year when all of the COVIDs happened. I wasn't expecting it. So I had my employees. We were traveling. We were in LA. I had some guys over here, some guys over here, and we were kind of doing our own thing. And so we're all staying at this hotel, right? And so it's like, the hotel is there and we're there and everyone's kind of under the same roof. And so because everyone's under the same roof in California, the rule is that that's considered like family. And so those people can be together, work together, hang out together because we're all kind of in this hotel and it's kind of considered a communal living arrangement, right? Well, we didn't really know that was the case. And so I had two of my employees take an Uber ride. They took an Uber ride with a friend that they met at the airport. Turned out the friend was not part of the quarantine. And so they weren't allowed back in the hotel. They got kicked out. It's like, hey guys, sorry, you can't come back. Rather abrupt, right? And so I'm sitting there with my business and I'm like, all right, well, shit, like this is not good. I don't have my employees here. We don't have any way to manage them. And so for me, I went through and I realized it. I admitted, okay, I should have been more aware and more control of that. What's the worst case scenario? They end up not ever coming back to the hotel. We have to work remotely now. And so I start prepping for all that worst case stuff. And then urgency and solution, I had my solution in place that afternoon. Okay, now realize with these two steps, there's no room for a negative emotion. Right? The worst thing that I can do when I make a mistake with finances is to pout, is to play the blame game. Right? Like I talk about in my book, Blueprint to Freedom, money is kind of like a river. It's got its own current. That river will keep on moving. So imagine me being on that river, just like on Castaway, I lose Wilson, right? My whatever mistake happened, I lose Wilson. He's off the boat. I'm pissed. I'm disappointed. If I stop paddling, I will go further down the river away from my goal. Not that I'm paddling towards that direction. It's going to take me there either way. And so if I make a mistake with my finances, I look at the worst case and I put the urgency in, because it takes out the ability for me to sit there and wallow and show a negative emotion and be disappointed, depressed, blame, victim, all that stuff. Right? So being urgent with my solution and then controlling the outcome. Right? Just like I looked at my worst case scenario and said, what's the worst thing that could happen? And then I urgently start handling it to get away from that dangerous situation. Controlling the outcome means, okay, I understand what I think could be the worst case scenario, but what do I want to have happen? Just because that could be the worst case scenario doesn't mean that that's what I want to have happen. What I want to have happen is very specific. I'm going to control that outcome. I'm going to take responsibility for every single thing inside of this little mess that I have now, and I'm going to control the outcome. Okay. Now, this is important to do after I've already taken action. This is why this is number 5, not number 4. Okay, if I look at worst case scenario and then I start looking at best case scenario, that's too much thinking. Too much time has passed. So I'm not trying to stop and think and deliberate. I'm looking at, okay, worst case scenario, let me get into action. Like just think about if there's a fire in your house, right? Find the fire, you realize, understand all that stuff, and then you start working on, okay, I need to contain this thing first before I do anything else. Okay, I can go try and save my valuables once I know that the fire is under control, nobody's gonna die, and I have some control over it, and I then go into, okay, what do I want to have happen here? Okay, but if I stop and I'm like, oh crap, my gold is upstairs, my life insurance paperwork, I should go get that, and I still let the fire keep burning, imagine what happens. So controlling the outcome, and then once I've handled it, then I reflect and learn. This is very last. Okay, here's the mistake within the mistake that can happen here. Realize it, admit it, and then maybe I do number 3. I probably skip number 4 and number 5, and then I immediately jump to number 6. That's called apathy. That's called I quit and I'm trying to make sense of it. I realized the mistake. Yeah, that was a mistake. I'm not going to fix it, but let me see what I can learn here. Okay, like think about this. If I made the mistake, it happened in one of the 3 quadrants. I had bad data and inability to reason, or I had good data with inability to reason, or I had bad data with the ability to reason. Neither one of those 3 things are people that I should learn from, even if it was myself. So when I was the mistake maker, right, I was operating in one of those 3 quadrants. Okay, if I haven't solved the mistake, then I have nothing to teach myself because I haven't actually fixed it. Anything I try and learn in that moment is only going to be something that further makes sense of the reason why I haven't handled the mistake. Like imagine if it wasn't you. Disassociate yourself from the mistake and say, okay, that person made a mistake. Okay, that person did not fix the mistake, and then they start telling me advice about what they learned. Am I really going to listen? No, I'm not going to listen because they're not successful in handling it. Versus if it's that person that made the mistake and they went through steps 1 through 6 here and they realized it, they admitted it, they looked at the worst case, they got urgent, they got on the solution of the mistake, they controlled the outcome and they solved it, and then they reflected and learned. Then they say, hey, here's my advice. Here's how I did it. I would be willing to listen to that person because they actually fixed it. They have something to teach me because they actually have the outcome I want. They learned something themselves. Okay, now reassociate yourself back with it. What if it's you? You made the mistake, you realized it, but you couldn't fix it. Can you really say you had a teachable moment? No, you didn't. You just had a mistake happen. Okay, so a teachable moment means that I actually did fix the mistake and I caused the solution, I controlled the outcome, and I actually learned something in the process of fixing it. Anything I learned from irresponsibility and doing nothing is not something that I should adopt as a policy to operate on in the future because it didn't help, right? So I look at the reflecting and learning next time at the very end. And then finally, I set out my rules. How do I avoid this in the future? That's really what this comes down to, right? Based on what I learned, how do I avoid this in the future? And in this, I'm looking at, okay, which of the three quadrants was it? Okay, was it that I had the right data, but I couldn't reason with it? Was it the bad data and the inability to reason? Or was it, I had bad data and inability to reason? It was, both of those things that caused me to make the mistake. And then how do I correct that? Because I'm going to go into learning mode now. Right, I'm going to go make sure that I understand, because it again comes down to my inability to reason, and this is important to understand because it's very easy. We get taught this in school incorrectly. It's very easy to look, read, or to watch and consider that learning. Right, I read that book. Doesn't mean I learned anything. I looked at that thing and saw it. It doesn't mean I learned anything, right? I've got Wealth Dynamics University. I've had clients that they watch all the videos. They don't learn anything, okay? Just because I watched it does not mean I learned something, right? So I have to really look at if I'm going to learn something, learning equals the ability to successfully apply what I've just learned. So if I read something and I can't successfully apply what I just read, I didn't learn it. If I watch a video and I can't successfully apply what I just watched, I didn't learn it. Okay, if I pass a test and I can't successfully apply what I just learned, I didn't learn it. Right? So when I'm going through this process, I get really deep on the learning side of things. Like I said, it came down to, was it words or was it math that I need to go learn? And it might be both, right? The words, like what is it, like what is the vocabulary involved with the mistake? And this sounds very like literal and nitty gritty, but this is the process I'd actually go through, right? Let's say again, the mistake was with my taxes. Okay, I'm going to look at it in the realm of the tax world that I live in. There's going to be vocab and there's going to be math. And I'm going to look at what are the things that I regularly interact with that I know I don't understand, and I'm going to make a list. Right? And it might mean that I go look at the thing I made the mistake on. Right? Let's say it was my profit and loss. My profit and loss statement. Let's say that it's that. Do I even know what a profit and loss means? I might need to go look that up. Right? What if it was, on my tax return, like it was, on my Schedule A? Do I even know what a Schedule A is? No, maybe I need to go look that up. Let's say, it's on the math side of things, right? So on this side, I'm looking all these things up. I'm going to very literally look up words in the area relating to where the mistake happened. Okay, and I'm going to do this until I have an aha moment, like until I'm like, okay, that was something that I know contributed to the mistake, and me not knowing it was one of the reasons the mistake happened. That's a win. That's an aha moment. I can now move on. So I don't have to clear every single word that I'm ever going to deal with the subject of taxes, but I'm going to look at that area and I'm going to go to the point where I'm like, okay, good, I've got this. I found out the thing that I didn't know, right? With math, this is symbols, right? And these symbols represent problems, and every problem has a solution. So I'm going to look at the math of something. Let's say that I don't know on the subject of taxes, I don't know the math that goes behind calculating my adjusted gross income. Adjusted gross income, that's the money that I actually pay taxes on, right? When I take out all my deductions and everything, my adjusted gross income happens before my standard deduction, then I pay my taxes. So let's say that I'm looking at that number and I'm like, all right, well, how is that actually calculated? Well, there's math behind that. Now, here's the kicker. There's math and there's vocab. The math is going to happen, but there's vocabulary that represents the math. I might need to look up words and find out the math here. Okay, but this is the problem is if I don't do that, then I end up back in the same situation next tax season, or I end up back in the same situation with the next investment that I make, and the mistake is prone to repeat itself. Okay, so I want to be very thorough. And again, listing out what is the math involved, what are the numbers involved that I deal with and that I interact with that maybe I don't understand, and then I need to go learn how those work. Okay, and I need to be as vigorous and serious with this as I am about not having the mistake happen again. The more that I invest into understanding and learning and preventing, right, then it's going to ensure further that the mistake doesn't happen next time. But if I'm nonchalant about it, I'm like, I really don't care, it's too much, I'll just pay someone else to do it, right? Well, here's the deal. Like with paying someone else, what if they operate in one of the 3 quadrants that you don't want to be in, right? So like we said, there's these 4 quadrants, right? Good data, poor reason, bad data, good reason, and then we have both, bad data and bad reason. And then the final one where we want to be at is good data and good reason. Right, so let's say I hire someone, and because I operate in one of these 3, I can't tell that they operate in one of these 3 either. You see that? Like if I have bad reason or any one of those, but it all is rooted in the inability to reason, right? If I have any one of those and I say, okay, well, I made a mistake, I don't want to deal with it, it's too much to confront, I'm just going to hire the professional to do it, and then I find out later that they were operating in one of these 3, now we've got 2 idiots working on the same thing. It's not going to be good. The equation doesn't get better when we add more idiots. Okay, and that's not to be offensive to anyone. Like I've been an idiot before and I have idiotic areas in my life now. It just means that I don't know. So I can't take an area where a mistake was made and start adding in more people that don't know and hope that it gets better and expect that something good is going to happen. So it really is like, I have to buck up and handle it. I have to buck up and learn it. Right? Now, the other thing I want to cover with mistake making is attitude. Okay. Attitude is so important, right? When I make a mistake, and this was something that I learned being in business. When I make a mistake, it's something where I have to have an attitude that I'm going to be learning focused with it. I think about the first time that I learned of this, I blew a sale. I was probably 19 years old, maybe 18. I blew a sale. It was going to pay me a couple of grand. I was excited about it. The sale blew up in my face. I didn't get it. And I called my manager and he's like, great. So how much was your tuition? And I was like, what do you mean? You mean, and it was a financial sale, right? So I was like, you mean their tuition? Because I thought he was talking maybe about college planning. He's like, no. How much was your tuition? And I was like, I have no idea what you're talking about. He's like, how much did you just lose on the sale? And I was like, $2,500. He's like, great. Your tuition was $2,500 to learn the lesson you're about to learn. Okay. So you just invested $2,500 in learning. What did you learn? And I actually started thinking about, okay, how do I get $2,500 worth of education out of this experience so that I don't just waste the money that I just lost, right? That's the thing with finances. Every mistake we make costs us money. So if we look at it like that and we say, okay, great, I'm actually going to take the causative side of this. And I'm not going to say it's a mistake and I lost money. No, I'm going to say I invested money in learning and it is up to me to go get more than that many dollars worth of education out of the situation. I don't stop until I've got more than $2,500 worth of education out of that mistake. Okay, so I have to be focused on learning. The mistake is my tuition, especially with finances, because it has a literal cost associated. Okay, I would love it if you all thought that way because it helps so much. Like it's no longer like it's almost exciting. Not saying it's good to go around making mistakes just so you can learn, but it's like, man, all right, well, that's a new viewpoint. That's a new mindset. I like learning things. So I can, instead of saying, crap, I made a mistake, because some mistakes might cost you like 100 grand. You lose money on a deal, right? That's a lot of money. So there's no better way to get more than that out of it than to say, okay, I need to go find 100 grand worth of lessons here that I really understand based on my ability to successfully apply them. Because the alternative is, again, I learned something without solving it, which is not learning. It's really an excuse for quitting and being lazy. Or I just go into negative mode. lost 100 grand. And what happens is we avoid the area, right? This is the key. Like if I don't solve the mistake, I'm going to avoid the area. And you'll see this with people with finances, that they stay away from the area entirely after the mistake, right? I don't do real estate because it didn't work. I don't do sales because it didn't work. I don't do multi-level marketing because it didn't work. Like, what if it was just one little tiny thing, like one little word or one little math equation that I didn't understand? Had I understood it, my 100 grand could have turned into 300 grand. Do I really just want to quit because I don't understand it? Right? So we can actually have this thing called opportunity cost associated with not learning from the mistake. And the way that you can tell this is if you look at others that are succeeding and you look at the frequency at which they're succeeding and the level at which they're succeeding, you can then see your potential to succeed in that area too. And not learning costs us that potential. Not going back and saying, okay, let me get more than I lost here in value costs us not only what we lost, right? So if I don't learn anything from the 100 grand, on one side, it cost me the 100 grand and I got nothing. So that's already bad enough. The 100 grand is 100% loss, right? On the other hand, the opportunity cost of what I could have learned, and maybe I could have been successful in the future with other money or other finances in that same situation, it cost me the potential of that too, which could be another 100 grand. It could be more than that. We don't know because we haven't even tried, because we backed off from the area that we made the mistake in because we never learned about it. See, making mistakes is not fun, but all of us can learn from it. It can be very profitable. Okay. Now, the other lesson that I've learned with mistakes that I want to pass on to you guys is I never make the same one twice, right? Like I'm not going to beat myself up, and I'm not going to be a hard ass on myself, and I'm not going to blame others. I'm going to learn from it and be positive and all those things, but I will not make that same mistake again. Okay. Because if I did, did I really learn anything? If I make the same mistake again, can I really say I learned something? I don't think I can. Maybe I did, but it didn't result in successful application. So I might have read it, I might have looked at it, but again, I didn't learn it. And this goes back to our ability to reason. I might think I learned it, but I might have learned about the wrong thing. So if I can't reason with finances, I can't pinpoint what was the why behind the mistake and fix that thing specifically so that the mistake really doesn't keep on happening. Because it continues to persist, it means I missed something. Okay, like a mistake that I've really learned about, I've really solved, will never happen again. And if it happens again, then whatever level of ruthlessness and unreasonableness in fixing it and learning that I had last time, I'm going to double up on it this time. Okay, because I'm not saying I'm perfect where I've only made any mistake only once. Right? There's times where it's been a second time and a third time, like, man, why does this keep happening? And again, I have to be more and more interested in the solution and increase my responsibility level and be more focused on, okay, which quadrant was I operating in? And was it math or vocabulary or both? And listing all those things out and handling it, even with more intensity than I did last time, because last time didn't work. So I need to be even more thorough and more serious about fixing it this time. Okay. Now, if I do all of that, then I don't want you to think about just the one mistake. I want you to think about over the long haul. If I practice this behavior for 5 or 10 or 15 years, okay, what does that look like on that scale? In the 15th year, that compounds the entire way. And I want you to envision that for yourself. Like how many less mistakes are you making after 10 or 15 years? You're almost perfect at that point because you've been applying a system of logic and reason. And then B, for 15 years, you learned something from every mistake you made. How much more unstoppable are you financially because of the new information and data and viewpoints that you had and solutions you come up with? Okay, I relate this to being in business. If you ever meet someone that's been in business, I would say at or after the 10-year marker, they're incredible. If they're successful, they're incredible because they've got 10 years of experience and failures that they've built up on. And that leads to them creating systems and coming up with unbelievable solutions that you would only come up with had you been through that mistake. And they've done it for a long enough time that it compounded and compounded and compounded and built. And that's actually a huge attribute to like an entrepreneur that's been in business that long. Same thing happens with finances. That can be a thing that actually makes my financial empire because I stuck with it that long and it built up over time. Okay. So guys, what I want to do is I want to open this up for some questions. I know we're going a little shorter tonight. Again, it's about 10:45 p.m. my time. So it's getting late, but I want to open this up for questions and we'll do some live Q&A here. So if you're in Zoom, drop your questions in the comments. If you're on Facebook, drop your questions in the comments as well. If you've got maybe a mistake that you've run into in the past that you would like some help or insight with, maybe we can talk through the system we just went over. Drop that in the comments as well. So let me go ahead and see what we have here on Facebook. All right, Steve, good to see you. Brad, good to see you. Nano, good to see you. Justin, what's up? David, what's up? David says I'm on Zoom and Facebook, getting savvy. He's doubling up on it. Sean King, good to see you. Justin says, I do a pretty great job with our finances. However, last month I got done paying bills and then started writing checks for giving tithe, which is my favorite thing to do. And I typically do first, not last, and realized I didn't have any money left to give. I just admitted it and learned and moved on. I'm human. That's a good example of that. And you know, with that, like Justin's example, which is a really good example, but that's an example of turning it into a solution. Like I know Justin, I know he probably already has rules and policies in place now so that next month it doesn't happen again. Right. So that really is like a great practical example of that. Thanks for sharing that, Justin. David says, I'm lazy at finance, easy for me to earn. Then I give my pile of cash to a professional for him or her to make it grow. Trust me, this doesn't work. There, I admit it. That's why I'm here. Awesome. So David's saying he's great at earning. And I see this a lot with great earners. He's great at earning in the past, and not currently, but in the past, he's just handed it off and trusted the professional. And it turns out the professional often can be operating in one of those other three categories. And we don't know that until we know it, right? And when we know it, it might be too late. It might be to the point where it costs us some money. And that's exactly what we're talking about tonight. An example of that, I had a client today. He sent me a emergency 911 text. It's about his taxes, right? And he's like, Jerry, I need you to call me. I need you to call me. I need you to call me. Whenever that happens, for me, it almost means I don't need to call them almost every time because it's never as urgent as they think it is. So I get the information. Okay, tell me what's going on. Before we get on a long emotional phone call, let me find out, get the data from me, what's happening. Well, my CPA said this and this and this and this, and I'm worried about that. I'm gonna have to pay an income tax on another 200 grand, and it's gonna be expensive, and I wasn't planning on that. And I said, hold up, okay, send me what your CPA said. Let me look at the data first. Okay, so I already knew this client, he didn't have the ability to reason with this particular data. I did. That's part of why I'm in his corner. So I said, send me the data that your CPA said, because I know I have the ability to reason. I want to see if this is good data or bad data. So he sends me the data, and immediately I can see that his CPA does not know what they're talking about. Okay, he couldn't see that. I don't know how long he's been working with this CPA. He's probably working with ours now after the experience today. But we were able to find out not only was the data bad, but the professional that he hired was bad. And so with this particular client, it would be a system of going through those 7 steps we just went over today, and then learning from it and making sure that in the future, they've got a better ability to reason so that when they do hire a professional, they're not doing it from a place of inferiority, saying, I don't know, I hope that you can take care of me. Because a lot of times the professional can't. And they don't know they can't, or they're not going to tell you that they can't. Sean says everyone has their starting point. That's very true. David says more idiots. That's great. Steve, welcome to the East Coast. I appreciate that. Thank you, Steve. Great questions and feedback. Let me see what we have here on Zoom now. John Moss says, how did you pack that library up? Very carefully. All right, David has a comment. He says, poor reason, assuming when you hire a financial advisor or accountant that cares for my money like I do, sells you products from the buffet, and I'll be content. No more buffet food for me. Thanks, Jerry. That's awesome. That's a great testimonial on what David has learned from working with us. We call it the buffet, again, because the average financial professional, they don't care what you buy. They just want you to buy something. So they just line out all the products and say, which one do you want? It's kind of like taking your kid to the buffet and then hoping that they pick out a nutritious meal. No, they're going to load up on ice cream and pizza and have no salad. All right, we have a question here from Avery. Pretty simple question, but I like talking to Avery, so I'll go ahead and put him on live here. All right, we're live with Avery. How are you tonight, Avery?
Hey, being great, Jerry. How about yourself? Another great call.
Awesome. Thank you. Thank you. What is your question here?
Yeah, my question is you gave the phrase realized gain, and was curious to know. Well, actually, I wanted you to redefine realized gain in a scenario where you would be in that particular position with an asset.
Yeah, so that's a good question. So there's the literal term realized gain, which has to do with selling an asset at a profit, realizing the profit, and then paying the tax on the profit. So that's called a realized capital gain. And you can Google that or look that up on Investopedia. But we use that particular definition when it comes to mistakes, because with a mistake, like the transfer already happens, right? Like when a mistake happens, it's too late to rewind it and say, okay, let me go backwards. Like we can't, just like with an asset, when I sell it, I can't be like, when I see the tax bill, never mind. Like I already sold it, I have to buck up and pay the taxes now. So with a mistake, it's taking responsibility, realizing I just like finished and completed that cycle. And then I look at the costs, right? What is this going to, what just happened? What's my tax bill here? What is this going to cost me? And then bucking up and being willing to pay the price. And the reason I say that is, again, a lot of times it's getting hit in the teeth hard enough that causes us to not make the mistake again next time. And so if I weasel my way out of it, I might never learn the lesson. And so what we're looking at is, okay, I made the mistake. Let's say you said in terms of an asset, let's say that I use the example of doing a bad investment deal, right? I do a bad investment deal, I don't vet it, and then I lose some money, right? So I lose some money. And for me to realize that mistake is to say, okay, I lost the money. How much did I lose? What is the implication? And then accepting that that's the price I pay for not knowing the math and the vocabulary, right? Instead of trying to get out of it or blame it or make it someone else's thing. So that's how we would fully realize the loss or realize the mistake there. Nano has a question here. Let me go ahead and bring Nano on live here. All right, we have Nano live here. How are you tonight, Nano?
Been great, man. And you?
I'm good. Thanks for asking. So what is your question tonight?
So my question is, I have missed, a bit of the introduction. I was running late today, but it's how do you deal with having to fix the same mistake they have made more than once, with possibly having to have a low concurrent moment with maybe a disappointment or dealing with a negative emotion?
Yeah, so that's a good question. And really with the mistake, again, if it happens more than once, it means that I didn't learn last time. And that can be one of two ways. It could mean that I literally didn't learn, like it just blew it off, and maybe I was emotional and didn't really try and thoroughly handle it. Or it could mean that I learned, but I picked the wrong why. I picked the wrong thing as the reason why the mistake happened. And so I learned about thing B when I should have learned about thing A, right? So if a mistake really it continues to persist and happen, it means that the right why or the right reason why the mistake happened in the first place was never identified, learned about, and handled. And so again, if it's with finances, I'm going to go through those 7 steps. I'm going to realize it. I'm going to admit it, take responsibility for it, like all of the things we talked about tonight. But then when it comes to the learning side of things, I'm really going to get nitty gritty with what was the vocabulary and what was the math that I missed last time. And I'm going to demo those out and look up words and look at equations and really like make sure I understand it to the point where I feel good about it not happening next time. Right? Like for me, anytime a mistake has happened where I got emotional, and then I'll mention like low confront moment. If I'm being low confront, it means that I'm flinching when I look at it. Okay, instead of staring the wolf in the eyes, I'm looking this way, and I'm flinching and I'm trying not to see it. So for me, it means that I know I looked that thing dead in the eyes. I did not flinch. I was unemotional. I was logical in handling it, and I know for a fact that that won't happen again. And on the previous times where it did happen again, that usually wasn't how I felt. It usually was like, okay, I did my part. Right? Like I'm almost blaming the thing or the mistake or the other party. I did my part. I handled my part, and then I move on. And then the mistake happens again, and I'm like, damn it, why'd it happen again? Well, it's all my part. So that's how I would handle that. And again, it really means I'm getting nitty gritty on learning. Again, it's vocabulary and math, vocabulary and math. What did I miss last time, and make sure that I've got it this time. Excellent question there, Nano. Let's see here. Steve asks, what dividend term meaning in your How to Create Wealth book, please? I don't quite understand that question. I think you're asking, what does dividend mean in my book? So a dividend is like a share of profit, right? So like when I invest with a life insurance company and they pay me a dividend, it literally means that they're sharing their profit with me. And so that's what a dividend is. With a stock, it means that they overshot their profitability target and they give the dividend to me as a shareholder as a reward for investing. Life insurance is similar. So a dividend is going to be like a payment or a profit or a yield from that investment because it was more profitable than expected. So that's perfectly, dividend within that context. I think that that's what you're asking there. All right, I think that's all the questions I see on Facebook. Let me see if we have any other ones here on Zoom tonight. All right, I think that we covered them all. Yep, that looks like it. So guys, we're going to go ahead and log out for tonight. Thank you all for watching. If you saw this and this sparked more questions, if you would like to learn more about what we do, you can reach out to myself, Nano Aquino. We'd love to be able to set up a call with you and answer your questions. One of the ways that I mentioned of handling mistakes is learning. And one of the best ways to do that is proactively, right? Life is going to be hard if I continue learning just because I made mistakes. So if I start front end loading the learning, then less mistakes happen because I learn proactively. So if you are on that train of, okay, I want to start learning, a great way to do that is grab a copy of my book, Blueprint to Financial Freedom. So if you go to jerryfetta.com/B2F, okay, that's the letter B, the number 2, the letter F, you can get a copy of my new book, Blueprint to Financial Freedom. And that's a way to proactively front end load the learning so that it doesn't happen. Okay. And I'm going to end this tonight with a quote from my dad. I don't know where he got it from. He probably got it from somewhere. Money is hard. It's harder when you're stupid. Okay. And I don't mean that to be offensive, like stupid, like the absence of knowledge. When I do not have knowledge, like money and life are already hard. So it makes it harder if I have stupidity and not knowingness on top of that, because it makes things more difficult than they have to be. So be proactive with your learning, be very, very focused on improving and being proactive with the prevention of mistakes by just having the knowledge so they don't keep happening. So guys, that's all we're going to hit tonight. Thank you all for watching. Make sure you like, share, subscribe, and I will talk to you all next week.